Hey there, it's David Stendahl with tonight's deep dive. It is May 16, 2019, and I'm going to look at lean hogs tonight. The ETF is HOGS. Part of the reason we're looking at that is that it's kind of a strange situation we're having here with that consolidation phase. So when you look at numbers, you look just at the numbers and we're in a consolidation. When we actually look at the market, you'll see that it's kind of an awkward one. So there's some strange opportunity that's popping up here, if you will, inside of hogs. Just to cover the bases, we got a mixed bag here when it comes to the trends. We got the technical rating, which is still pointed to the upside. We have a wave load that is triggered, which is a bullish bias, and we have pretty strong support to the market. If we take a look at the market itself, here's hogs. You can see the nice rally that we had in March and into April, and then the downward bias that we had. And it's been fairly volatile here on daily bars. But here's the consolidation that's underway. And I said weird before, that it was a weird consolidation, that it's been fairly tight. We're now beginning to break out, and there's still I guess some tendencies where the market still could have some volatility here as it follows the 50-day moving average. But I believe that this, if you kind of look back in time, you can see that we're still in a consolidation. It's just not the more traditional, very obvious consolidation because of the volatility essentially associated with it. But we do have a trigger here where the wave low is active right now. That's what this little blue dot represents, and it's done a pretty good job in finding a base. The market has certainly rallied in the last couple of days or so, but as long as we're following the 50-day to the upside and coming up against this major resistance here at 99 and a half, what we're going to look at is specifically some support and resistance gaps, and it's the resistance gaps that really favor this particular market. So to really judge this, what we'll do is we'll take a look at hogs. Now what I've done is I've updated the information on the website. I just am leaving yesterday's information on here for this particular presentation. So what basically took place is we had a nice surge to the market, and we're in the 92 range right now. So it's right within this little resistance gap. There's nothing really holding the market back, and so there's the ability to sort of break through this resistance fairly easily. 93, I'm just going to round here, 93 and a half is going to have some form of resistance, not super strong, but if we're able to break that, then that 95, and again I'll round 95 and a half, there's still nice resistance gaps, meaning not having any resistance, and that there's an opportunity for this market to have a nice little rally to it. Now, if we look at the depth gauge, we're still on a bullish swing to the market, and that's been underway for some time now. So there's nothing telling us that it's going to top out, at least according to the depth gauge. But when we look at the seasonal tendencies, this will give us an idea that there's still an upward bias, but it's going to be on a counter where it's going to be short-lived, and then there'll be a reversal. And so what we're looking at is that here's the little triangle that represents where we are right now in the market. You can see that, at least on the 10-year notes, that we should expect the market to rally here a little bit longer into June, and then we start to taper off here. And we taper off when we look at all of the different seasonal trends to the market. So it can be one of these things that as long as for the next part of May and into a little bit of June, halfway through June, that's when we should start to top out. So that's why we're looking at the market itself still having a little more upside biased. Now, just simply watch the resistance level at 99 and a half, basically, and if we are able to reach that level, we will have come through that resistance gap that I pointed out. So that could be the last hurrah, but for our purposes right now, our systems are flat. Well, they're not flat, they're hedged. We have two long systems and two short systems. So because we're in this little consolidation, even though it's a weird consolidation, we're in that consolidation. We have a little bit of hedging that's going on right now. So any little trigger to the upside, I would suspect that we're going to lighten ourselves on the short side, possibly start to go a little bit longer in some other systems, but just simply realize that this is only going to probably last for another 2 weeks or so, if that, and you should expect some type of a reversal. But for right now, take advantage of any type of a breakout above these levels right through here because of that resistance portion. That high of that bar is 93 and 93.82. And so if we can break above that, we should be able to go back up and retest, or at least come close to these highs. And then with the seasonal tendencies, we'll see what takes place from there. The other thing I'm going to point out is that I've added some more systematic advantage videos. So if you want, you come to resources, systematic advantage. We've got basically 50 of them up right now. There's going to be a total of 250, but these are just quick little 30-second videos that talk about the advantages of systematic trading. So if you're interested, you can find those. Just kind of a fun little thing that I did because I like talking about systems and whatnot. So just come to resources, systematic advantage, and you can click and skip ahead if you want to look at those that are in the 30. They're all unique, and so from that perspective, it just simply gives people that are discretionary kind of an insight into what advantages systems actually offer to people. And there's a whole slew of these things. They're only 30 seconds long, so you can at least take a look at them. And whenever I have an idea, I try to put it in writing or put it in a little video so I don't forget about it. So with that, we will take a look at some markets in the near term. Thanks very much. Bye-bye.